Hello everyone, a warm welcome to all of you. I am Deshna Sawant and I will be your moderator for this webinar. Thank you for taking the time to join us for the exclusive webinar. We are excited to announce that we are collaborating with Updapt, an ESG tech company, to host this insightful webinar. Today's concerned topic is BRSR Excellence Advisory for Value Chain Partner Disclosures, and I'm delighted to lead you through a session filled with informative insights. The speaker panel today comes with a wide experience and they will guide us through the webinar. Our first speaker is Mr. Rishabh Singh, a sustainability consultant at A A Garg Co. He excels in ESG reporting, strategy implementation, climate risk management, net zero initiatives, corporate sustainability, and circular economy. Rishabh has led numerous government projects across India. Joining him is Mr. Hussain Papia. He is the head of innovation in sustainability, coming with an experience of 12 plus years in environmental management and sustainability. He is an ISO 14001 EMS lead auditor, ISO 14064 GHG lead verifier, and a certified professional in carbon footprint by CII. We are also excited to share that joining him will be Mr. Prateek Patankar. With expertise in ESG, sustainability, publishing, IT sales, and educational technology, he is the Director of Business at Updapt, an ESG tech company specializing in ESG and climate technology. Lastly, we have Mr. Rahul Krishnamurthy, specializing in sustainability and climate tech. As a product lead with experience at Adani Power and Updapt, he develops advanced ESG platforms to help businesses meet sustainability goals. Now let's go over a few important guidelines to ensure the smooth session. This meeting will be recorded. This is an open session with an invitation to all. We request to keep the discussion within the mentioned topic. We request restriction from spamming or marketing during the session. After the webinar, the floor will be open for questions from the audience. Please ask your question using the raise hand feature. As your turn comes, unmute yourself, introduce yourself and your company briefly before asking your query. You may also please keep entering your queries in the chat box and we shall get back to you. I would now like to invite our first speaker, Mr. Hussain Papia, to brief us about A A Garg Co.
Good afternoon, everyone. Just a brief introduction about us. We are A A Garg Co, also known as A2G. We are a management consulting firm specializing in ESG, which is environmental social governance, EPR, extended producer responsibility, corporate finance, and business operations. With a highly skilled team of experts and diverse professional backgrounds, we provide customized technology-driven solutions for sustainability. Our mission is to combine sustainability and expertise to create lasting value for both our clients and the planet. Next slide, please. Now let's take a look at our ESG services. Starting with ESG leadership advisory and strategy, wherein we create a sustainability strategy to align with the business strategy and develop a roadmap for adoption and sustainability transition. Next up, we have materiality assessment and stakeholder engagement, wherein we engage the stakeholders and deliver materiality assessment with 4 approaches, namely impact materiality, financial materiality, double materiality, and CSRD aligned double materiality. Next up, we have ESG baseline assessment, wherein we do assessment of greenhouse gases, water, waste, or land footprints. Then we have net zero climate risk mitigation goals and initiatives, wherein we find out the vulnerability of the business in the context of climate change. We give an assessment of opportunities and a roadmap for ESG goals and KPIs for those initiatives. Next up, we have performance management and governance and strategy services, wherein we integrate ESG into various functions of the business. And finally, we have external reporting and ratings, wherein we provide end-to-end reporting, consultancy solutions, and advisory on major frameworks such as BRSR, GRI, IFRS, and ratings such as CDP and MSCI. Sorry. Next slide, please.
Thank you, Mr. Papia. Now, I would now like to invite Mr. Prateek Patankar to walk us through about Updapt.
Yeah, good afternoon, everyone. So Updapt is a ESG tech company which provides SaaS solutions to enterprises and funds across geographies. With our digital ESG solutions, enterprises can manage their ESG lifecycle and reporting by tracking, monitoring unstructured and large data sets in alignment with global sustainability standards and frameworks, along with deep analytics and AI and ML based insights. So, your next slide, please. We have multiple digital ESG solutions around GHG accounting, reporting, supply chain, risk management, net zero, portfolio management for funds, empowering the businesses in their decarbonization journey. Next slide, please. We now have 100 plus clients across industries and geographies. Yeah.
Thank you, Mr. Patankar. To get started with the webinar, I would now like to invite Mr. Rishabh Singh.
Thank you, Reshna. So to start off with, first of all, let's have a look at when and how this BRSR core disclosures for the value chain partners came into picture. So if we see back in July 2023 last year, SEBI came out with the circulars, and the three major highlights of their circular were the new format of the BRSR. Secondly, the assurance requirement for the BRSR, and the third one was the value chain partners disclosures based on BRSR core. So what that circular mentioned was that the companies will have to report on the BRSR core parameters, the 9 parameters that are in the BRSR core for their value chain partners as well, to the extent that is attributable to their business with that particular value chain partners. Yeah, the next slide, Deshna. So if we look at the major highlights of the regulations that have been mentioned in the value chain partners disclosures for BRSR core, so applicability is for the top 250 companies as of now for the current financial year. And as we know for the BRSR as well, they had started off with few companies, and now we have 1000 companies who are mandated to report on BRSR. So it is expected that BRSR core disclosure for value chain partners would also be extended in the coming years for more companies. So even though many of you might not be in the top 1000 companies, but this is something that you will have to start off to work upon, because this is something that would be mandated for further more companies going further in the future years. As of now, they have mentioned that the companies have to report on a comply or explain basis, the case which is the case for the BRSR disclosures as well. The composition of the value chain partners for which you have to disclose is that you have to disclose for the upstream and downstream partners both, comprising 75% of your sales or purchase from the respective value chain partners. So this is quite a comprehensive task to do, because for many of the companies, value chain partners in the upstream and the downstream could range from hundreds to thousands. And capturing 75% of your entire value chain by the value of business done is something that could be a challenge for many of the companies. The reporting format for the value chain partner disclosure is that you have to disclose this data as part of your annual report in a consolidated form. However, it is to be seen yet, it is to be clarified that whether it would be part of the BRSR disclosure itself, in which case we could have a modified BRSR format, that is the most probable, or it could be separately as part of that annual report as well. So that is something that we'll have to look at. The SEBI will have to clarify this. In terms of assurance for this reporting, so they have mentioned as of now that assurance would be from 26 financial year 26, not from this year, and it would be on a compliance or explain basis, and it would be a limited assurance. So these are the regulations as of now. However, there have been new developments in this, which we will see in the next slide. Yeah, Deshna, next slide, please. So what has happened after that circular in July 23 by SEBI is that last year, after the budget for FY 23-24 was declared, SEBI had basically constituted a committee which was the purpose of which was to see at the various LODR and ICDR regulations that are under the SEBI from the point of view of ease of doing business. So the committee, while looking at different mandates in these two regulations, also found out that ESG disclosures is something that is also there. And hence, when the committee came out with its recommendation, they also had few recommendations for the disclosure on BRSR, and which also constituted disclosure on value chain partners based on the BRSR core. So we see the few recommendations of this committee, and the circular for this was released on 22nd of May with a separate recommendations by the SEBI as well, which is also been released. So now what the first recommendation they have put up is that the value chain shall encompass the upstream and downstream partners of the listed entity, individually comprising 2% or more of the listed entity's purchase and sales. So what this basically means that the maximum number of value chain partners that one will have to disclose if this is implemented is that it could be only limited to 50 value chain partners uh, in the upstream and downstream. So obviously, as last slide I was mentioning that the number of value chain partners that one would have to disclose could be ranging to from hundreds to thousands, but this limits the value chain partners to 50. The second recommendation that they alternate proposal that they have proposed in that recommendation is that apart from this, it shall be also be cumulatively limited to just 75% of the listed entities purchase or sales by volume. So this basically means that the maximum number of value chain partners that you will have to report on would be 38. However, these are still recommendations, and clarification and finalization on these is yet to come from SEBI. So we'll looking forward to see. But as of now, obviously, you will have to report for your entire 75% based on the value of business, and there is no limitation on this. But these are some of the recommendations that could be implemented. And few other recommendations that that were mentioned is that since this is the first time it has been implemented, the financial year 20 the previous year number should be voluntary to report on. And also, as we seen in the last slide, the assurance for this is on a comply or explain basis, and a limited assurance is there. Now they have recommended it instead of this comply or explain basis, there could be a voluntary approach to assurance. So if some companies want to have assurance on the value chain partners data, they can have, otherwise not. One additional proposal is that to disclose the percentage of total sales and purchases covered by the value chain partners for which the disclosures are made. So this will entail just not the companies attributable to the company, but overall purchase and sales of the value chain partners. Yeah, Deshna.
Yeah, thank you, Rishabh. Thank you, Rishabh. I would now like to invite the next speaker, Mr. Hussain Papia.
Now let's take a look at A2G's six-step. Now let's take a look at A2G's six-step approach to value chain disclosures. Starting with first identifying, which is defining relevant upstream and downstream partners. Second, we categorize, wherein we focus on those representing the top 75% by value. Third, we shortlist key partners for detailed engagements. Next up, we engage and communicate with the value chain partners for disclosure requirements. Fifth, we collect, gather, verify, and consolidate ESG data for preliminary supplier assessment and subsequent data collection. And finally, we report, wherein we compile and disclose the findings in alignment with the BRSR core framework. Next slide, please. In this slide, we can see some examples for upstream and downstream. Firstly, we have for upstream, such as purchase goods and services, supplies from contract manufacturer or job worker, capital goods, supply chain side logistic partners, upstream leased assets. Next up, we have for downstream some examples such as customers, downstream transporters and distributors, downstream leased assets, and franchises. Next slide, please. In this slide, we have the objective of our advisory solution, wherein we prepare the BRSR report encompassing all the accurate disclosures for essential indicators, making the report ready for third-party assurance and for solicited ratings in the future. Next slide, please. In this slide, we have the key deliverables for our advisory. Firstly, we have the gap assessment wherein we review the current state of ESG, and finally identify the gaps in compliance with BRSR essential and leadership indicators. Secondly, we have evidence collection support wherein we advise on the documentation required for each indicator, assisting in identifying and addressing gaps in supporting evidence for assurance requirements. Thirdly, for assurance readiness, we conduct a pre-assurance review to make sure that the evidences that have been captured are sufficient. Fourth, we have ratings preparedness, wherein we provide recommendations for aligning disclosures with different voluntary rating agency expectations to enhance the ESG ratings. Next up, we have ongoing support, wherein there are regular checkpoints to ensure progress and address queries during the advisory solution. Next slide, please. The deliverables for this advisory engagement are as follows. First, a gap assessment report, which is a detailed report highlighting current gaps and recommendations for compliance with the BRSR framework. Secondly, we have an evidence checklist, which has a comprehensive list of required documentation for assurance readiness. Third, we have pre-assurance review summary, which is a summary of observations and suggested improvements for assurance. And finally, we have reports from advisory sessions, which will include minutes and key takeaways from all sessions conducted. The timeline for this engagement is going to be about 8 weeks. It can be as follows. Week 1, we'll have a kickoff meeting. Week 3, there'll be a gap assessment completion. Week 4, there'll be evidence readiness review. Week 5 and 6, we will do a pre-assurance review. And finally, week 7 and 8, we will deliver the final advisory sessions. It is important to note that we also have a consulting solution wherein we prepare the complete BRSR report for our clients. Next slide, please.
I would now like to invite our first speaker from Updapt, Mr. Pratik Patankar, to speak about leveraging tech tools for enhancing value chain partner disclosures and performances.
Yeah, thank you, Dishna. So first of all, why value chain ESG disclosures are important. So as you all know, Scope 3 emissions specifically comprises of 90% of the organization's emissions. So if you talk about reporting of a company's value chain ESG disclosures, their social governance, ESG impacts throughout its entire supply chain, from raw material to extraction to final product delivery. So this will also include assessing the ESG performance of suppliers, distributors, and other key stakeholders. So some of the important points why ESG disclosures value chain ESG disclosures are important. So it helps in enhanced transparency, risk mitigation, stakeholder engagement, and as we all know, because of SEBI compliance, so regulatory compliance is always there. And then gaining a competitive advantage within your peers. In our journey so far, what we have, talking with different clients, what we have found out, there are key challenges which are faced by the organizations. Yeah, Dishna, can you move on to the next slide, please? Yeah. So key challenges will revolve around data collection and standardization. Many Indian companies have intricate and diverse value chains involving numerous suppliers, distributors, and other stakeholders. Collecting accurate and consistent data across this extended network can be daunting. In that, the absence of standardized ESG metrics and reporting frameworks for value chain partners can hinder data comparability and analysis. Then engaging value chain partners. So many small and medium sized enterprises in India may lack the resources, expertise to understand and implement ESG practices. Educating and empowering them can be time consuming and resource intensive. And as you all know, change is very difficult. So some partners may be reluctant to share sensitive information or adopt new practices, fearing potential costs and disruptions to their operations. Assessing and mitigating risks, pinpointing specific areas within the value chain that pose significant ESG risks, such as labor rights violations, environmental pollution, or corruption, requires thorough due diligence. And once risks are identified, companies must develop effective strategies to mitigate them, often involving collaboration with partners and third-party experts. Setting up ambitious targets and monitoring progress. What we have found out is establishing a clear baseline for ESG performances across the value chain is crucial for setting meaningful targets. Tracking progress towards these targets and making necessary adjustments requires robust monitoring systems and regulatory reporting. And the last one, what we have come across as a key challenge with our clients is balancing cost and benefit. So implementing robust ESG practices and reporting can be costly, particularly for smaller companies. Balancing the investment required with the potential long-term benefits can be challenging. And given limited resources, companies must prioritize ESG initiatives that have the greatest impact on their overall sustainability performance.
Thank you everyone for your participation. Our team also offers an exclusive meeting with our experts. If you have any of your questions that were left unanswered, you can now book a consultation to connect with our team. The link to book the consultation is shared in the chat. I sincerely thank our amazing speaker panel and our audience who have made this webinar a success. Thank you everyone.